Hello, hello, and welcome to another episode of the Burn Your Boats podcasts. Today, I think, is among the most useful and insightful episodes that we have recorded to date. We have a very, very special guest on. You see, there are really three pillars on which real estate sits. Number one, first and foremost, the most important part is data gathering and analytics. This is all the information you need to put it into your hand that allows you to pick up the phone and make an offer, because you have got nothing until you have a deal. Secondly, we move on to field work. That's the nuts and bolts of the house, the roof, the floors, the doors, the baseboards. Okay, so that's a different skill. And finally, we have a contracts manager. So that's somebody who's going to look after the contracts, look after the financing, look after taxes, payments, and ongoing asset management of the portfolio once you own a real estate portfolio. Master these three core competencies, right? They are required absolutely to grow any real estate portfolio. Master these and you will be financially free to burn all the boats that you wish to burn. So today we introduce Ariel Herrera, a real estate investor and a data scientist. Ariel was frustrated by the lack of usable tools available to investors and has taken her data crunching and analytical skills and applied them to the single-family home market, providing investors with data analysis that used to be only available to billion-dollar REITs and commercial developers. Ariel has built a multi-pronged education ecosystem of tools and community for you, the listener, to learn, grow, and develop your real estate journey that can dramatically increase your success rate and hasten your financial liberation. So get your pen and paper, as there's some serious actionable information in today's episode. And without further ado, let's get right into it. Okay, ladies and gentlemen, welcome to the Burn Your Boats podcast. Today, we have a very special guest here. We have Ariel Herrera. Ariel has got absolutely unique skill set that I've seen in the real estate world, in that first and foremost, Ariel is a real estate investor. And secondly, and here's the superpower, Ariel is also a data scientist. And if you are a real estate investor, or if you have been listening or working in real estate over the last 10 or 15 years, you will know that there are a number of major components to being a successful real estate investor, a real estate flipper, a real estate wholesaler, or basically any aspect of real estate. You need to have data, because data is where the buyers are, data is where the sellers are, data is where the deals are. So you need to have a real firm grip on data. And nothing else happens downstream in real estate if you don't have the data. You don't have that data quickly. You need to be able to analyze the data, and you need to be able to make conclusions and take action on the data. Everything downstream, like negotiating, flipping, hard money lending, buying, selling, listing, everything else is downstream of the data. And today it is my honor to welcome Ariel Herrera, the founder of a brilliant podcast in real estate called Tech in Real Estate Podcast. That's called Tech in Real Estate Podcast. She also is the founder and host of the Tech in Real Estate YouTube channel. She also, in addition to all of that, she also offers coding classes for you budding tech real estate investors out there, so you can build your own data sets and your own models. So Ariel's approach is multifaceted. And on top of all of that, Ariel also runs a community for real estate investors called Coffee Clozers. And that can really help you as an investor dramatically speed up your real estate journey by deciphering all of the what looked like massive challenges and huge data sets and how do you do this and how do you do that. Ariel has got the answers for you. And so without further ado, Ariel, welcome to the show today. You are a rare light. You are a unicorn in the real estate business. So it's a pleasure to have you and welcome to the show.
Thank you so much, David. What a great intro. Really appreciate it as well, Clark. So happy to be here.
We had been crunching data manually for a decade or more. And, you know, whilst we started off crunching it in-house, then we outsourced some of the data crunching. And when I say data crunching, I'm talking about, scouring MLS, scouring, wholesalers, scouring public records for probates, for foreclosures, for pre-foreclosures, for lis pendens, for all of this stuff. And that data is enormous. It's an enormous block of data. And we chunk that data down to, on any given day, what could be 2 or 3 actionable pieces of item, but they're a needle in a haystack. And we came to you, Ariel, because you are one of the very, very few people who in real estate that I've been asking for a decade or more. How do I automate data in real estate? And I came across your YouTube channel and I'm like, there's the unicorn. There she is. So, Ariel, can you tell me a little bit about your initial journey into real estate? How does a data scientist end up investing in real estate? And tell us your journey. Tell us a little bit about yourself, Ariel.
Perfect. So currently I live in Tampa, Florida, but previously I grew up in New Jersey and I went to Rutgers University, so the big state school there. I studied business management with the idea of becoming an analyst of some sort, but everything changed when I got my first job outside of college, which was as an analyst. And they had a lunch and learn. For those that don't know what that is, it's usually something approached by the company. And while you're eating lunch, you learn about it. So that particular course was about VBA, how to program in Excel, how to automatically do pivot tables, combine data, and drive some insights. And at that stage, my mind was blown. I'm like, wait, the task that was taking me 2 hours a day, I could just write 50 lines of code and it's done within minutes. Sign me up. So from there, I took my career to become a tech analyst, then shifted over to data science. So looking at not just a spreadsheet of data, but think of 100 times of spreadsheets, many, many, many rows, and developing insights with models. So I had a job in New York City, and I'm now like year 5, 6 into my career, and my day-to-day looks like this. Wake up at 4:45, catch the bus by 5:15, get to the city by 6:30, 7 o'clock, hit the gym, go to work, come out of work at 6 p.m., get home at 8 p.m. And I was
Wow.
doing this every single day. But what was strange to me is that even though I was sitting here feeling like, where's my time going? Everyone around me on the bus, on the trains, were doing the same exact thing. Stern face, and just this is what we have to do for the next 30 years of our lives.
Yeah.
And I thought, this is not going to be my end.
I lived in New York too, so I remember I remember Pink Floyd, Welcome to the Machine going through my head every day as I did that
Yeah.
exact routine. But please, this is your time.
Sure. Yeah. So it's definitely a lot of people can resonate with this. But at this stage, what I really wanted was time freedom to get back with my family, my friends. I could be more present and also be able to do some of my own projects. So as many people do, you look at how do you quit your W-2 job? And well, the
Very good.
first thing that came up was passive income streams, like starting an Amazon business, trying to write a book, maybe going into stock trading. And the one that really spoke to me was real estate. It was the same asset class that many people have done over hundreds of years with less resources than myself. So I thought, if they could do it, why can't I? And that started my journey of diving into real estate, reading books, listening to podcasts, and ultimately looking to acquire my first deal, which I saw there were a lot of challenges and a lot of manual steps, which I could touch on.
Ariel, talk a little bit about, because I love that you had, we hear it all the time, right? David and I talk to all these people and they say, I want to replace my income, right? Like I work at XYZ job, I hate it, or maybe I just, I'm seeing that I'm not going to be liking it in the future. How can I replace my income? let me buy some passive real estate rentals, and voila, in 5 years, I'll be financially free sitting on a beach, right? But a lot of other people too are like exactly like you said, Amazon drop shipping, e-commerce, all these different kind of side hustles to be able to create, you started as a side hustle and then you move it to your main hustle so you can quit your job. I'm just curious because a lot of people listening to this are probably thinking this exact same thing. What type of decision-making process did you go through, and how long did it take you from the first time that you Googled, how do I do Amazon drop shipping? How long did that take you, and what process did you go through before you finally landed on real estate?
Yeah, so I actually looked at, I think there was a couple that they were doing the Amazon shipping and they had a course on it, which I didn't take, but I was just looking at like the titles of the different sections for the course. And I'm like, oh my God, this is so many steps to do. And like you screw up one step and the whole downstream is kind of like a waste or it doesn't get done as well. Whereas real estate, you can kind of mess up a little bit in the beginning because a lot of us do go through issues. Maybe we don't screen our tenants appropriately in the beginning, or we choose a property that doesn't have a driveway where that's really needed in that area. But typically, if you hold a property long enough, you can still see even some few mistakes that you make in the beginning be fruitful in the end. So that's why I made that shift. After reading a couple of books that had the same like theme of, hey, real estate is great for long term, is why I decided to choose that asset class.
Ariel, you are in New York. You've decided I'm going to get into real estate. I can resonate absolutely with being in New York and trying to figure out how do I get out. I remember one day I was in the city and I saw this guy driving out of the city with a surfboard in like it was downtown or Wall Street, wherever it was, with a surfboard on his roof and driving out. I'm like, who is that person? It's like it's gonna do something fun today, you know? And yeah, I had the same kind of conclusion that a few people tell me over the years. I was in construction project management at exactly that time in New York doing the same thing, getting up early, and they owned me. I made good money and all that kind of stuff, but I was trying to figure a way out. And we all have our own different way out. We all have our and our own entry point into real estate. So you get into real estate, you decide that you're going to do it, right? Can I ask how your very first deal, like where you did it and how you did it and how you recognized very quickly that the data side, because that's a unique skill set to be able to invest in real estate at any kind of scale, but also to be able to incorporate the data. And I just want to say something as I asked a question. There are three real stools in real estate. There is the data gathering, analysis, underwriting, and offer making. That's stool one. Stool two is out in the field, looking at the property. What's the real situation on the ground? Is there snarling dogs or Dukes of Hazzard or anybody next door? Is there something going on? Even that I can't see in this house. We need to get it, cleaned up, occupied. We need to get tenants in there. We need to put a new roof and AC. That's its own skill. And then the third seat is always contracts management, finance, loans, mortgages, refinances, and all of that. And they are the three stools of real estate. If you can have all three, and if I was to put a team together of real estate investors, I would put a data analyst, I would a construction project manager, and a really strong finance person. That's the dream team in real estate. If I were to put this team is going to be successful, right? Now, you were out there, you think about doing your first deal. Tell me how you decide what market. Did you buy in New York or did you buy outside? Because you're in Tampa now.
Yeah, exactly. At that point, I wasn't even thinking about going out of state. So this was back in end of 2018, early 2019, and very much so. I am working remotely like 2 days out of the week, but a large portion is going into the office. So I knew I had to be within a proximity where I can get in and out, maybe within an hour. So there's different ways you can work through how to choose a market. In this sense, I kind of thought about who I wanted my end person to be, which was myself. So a working professional, where would they want to live and where would that be comfortable? So New Jersey, you can kind of think of it as like a Z, but kind of sideways.
Yeah.
And when I started looking at markets or areas to invest in New Jersey, I immediately didn't want to live anywhere too far. I wanted transportation to get in and out of New York within 1 hour. Buses are a pain because they're susceptible to traffic, so that means train lines. Now, there's only so many train lines that go into New York. So now I've cut New Jersey by like half, and I'm only looking at maybe like 4 to 5 different train lines that go that direction. And I've cut the amount of towns that can get you within an hour. So a lot of people want to live in North Jersey, easy access, but the property prices were pretty high. So that's the next step, starting to see where the prices of properties were. At that stage, I was still looking at traditional financing, so putting down anywhere between 5% to 20%. And I had about 30K saved up that I wanted to put towards the house. So automatically going for a $700,000 house was not going to work. So this brought me to look at the East Coast train line. Those towns were all pretty much around 200 to 400K for a home. And now I started to look at some of these towns, but I noticed that the ones that were more fairly priced didn't have that much pride. And what I mean is that they weren't owner occupied as much by people that own the properties. So what you see that happens, and you could get this data from the US Census, which is what I ended up doing, is you could see for a given area how many people rent versus own. And if you own a property, that's your asset. You care about the lawn, you care about the street. You might be a part of a Facebook community to make sure it's upkept and there's less crime. So I immediately started to eliminate areas like Elizabeth, New Jersey, and some other ones that were very tenant focused. And even if you walk through some of these, like Newark as well, you'll see like sketchy characters and trash, at least at that time period. So this now brought me to 3 main towns in New Jersey, which were Matawan, South Amboy, and Woodbridge, New Jersey, all by the train lines. And because I was investing in my 20s, I cared a lot about future growth. So I wanted to see what new development is happening. And each of those towns, when I brought in data from Google News, they all said they were redeveloping to bring either ferries to have better service into New York, to have more warehouses, which would improve employment, and some other factors. So ultimately, what I decided on was South Amboy, New Jersey as my market based on this data I collected, both US Census, but also just analyzing maps and kind of just intuition of psychology of how people would, where they would want to live and how they would want to commute to their job. And my first property that I invested in was a single family home, and I ended up house hacking it.
Wow.
That right there, David, I hope everyone that's listening, 99% of people that own rentals that are probably listening to this went through about 1% of the analysis that you went through. And it's unique because I'm just as guilty, right? It's like, where should I buy my first rental? Well, I know I live in Tampa, so where's a nice area in Tampa to buy? Okay, that looks nice. How much is the rent? How much is the mortgage going to be after a down payment? Voila, I'm into my first rental property, right? And I think I've described a lot of people that are listening in terms of the analysis that they've done on that. And you've created, this platform, this technology to be able to essentially take all of this data. You said US Census, right? I guarantee you, if we took a poll right now from our listeners that said, how many people have used the US Census as a factor in the next investment they're going to make, it is going to be 0 out of 10. They're going to say, I've done that, right? And the ironic thing about it is that this is not necessarily a new way of thinking. It's just using commercial, right? It's using commercial underwriting to look at migration patterns, to look at, big companies that are coming in, how many of them are remote, how many of them are not, who's moving in, who's leaving, a lot of different things before you make a $50 million decision on buying a 200 unit apartment complex, right? But the unique thing is you're using this on one rental property, right? And I want to rewind back because you said something earlier that made me laugh, is that you said, well, I was in college and I could just write 50 lines of code to be able to save 2 hours, right? And it's like the light bulb went off. I know that me, probably David, and a lot of people listening I took a computer programming class in college, or maybe it was high school, and I had to cheat my way to a C minus. Like, I think I probably had to bribe the teacher to give me a passing grade, right? So me writing 50 lines of code would be like a donkey doing calculus, right? Like it would take me years to write 50 lines of code, right? So I think that the amazing thing that I'm excited to hear about, just selfishly as a host of this show, but also just a listener and a consumer of that product, is you started to collate all of this data so that the guys that are doing donkeys, doing calculus, now it kind of makes sense. So kind of talk to us a little bit about how you started to collate everything into a much more user-friendly, format so that guys like me could understand what the hell is even going on.
Sure. And also, Clark, I love that you mentioned that commercial has been doing this for so long.
Yep.
Like, why isn't it available in residential real estate?
Right.
And that's pretty much my first finding. So as I knew my market was South Amboy and I was looking at properties, I was like, all right, well, I guess I'll just find whatever tool is out there. I'll download all the listings, rank them by cash flow, and go for the property that's the highest. Then I was stunned to find out that the way people were analyzing deals was going to Zillow, which is made for like newlyweds and people retiring to find new homes. Then they were plugging that into spreadsheet and then possibly taking that latter phase of searching the economics behind it. So I thought there has to be another way that I could stream this data more effectively. And that's one of the reasons why I created the channel, Tech and Real Estate, was that as I was trying to uncover how to utilize data, I was like, maybe someone will find this useful one day. I just posted some tutorials. So ultimately, the main sources that I used were economic and market data. So economic, I mentioned the US Census, which basically polls the US population. They do a big one every 10 years, and then every year they do a smaller sample set to get some context, like how much are people making in the area? What are the vacancy rates look like? A lot of different metrics that could really help investors. Then on the second end was looking at market data. So what's really awesome is that Zillow, Redfin, and Realtor have been posting for years market data.
Yep.
Every month for free. They summarize from nationwide all the way down to zip code how many active listings there are. What's the median listing price? How many price cuts are there? Rent values, all these things. So for me, it was more so think about it like having 5 different spreadsheets and trying to combine them together, which for those tech folks on the call, you'll be like, oh, it's pretty simple. Python, maybe do pandas join. Well, the issue was that a lot of this data was very messy. And for those who are even browsing Zillow, you'll see at times data could be missing for a certain property. An agent categorizes another property incorrectly. So real estate data isn't perfect. And that was one of the recognitions I had to have. But ultimately, what I was able to solve there was quickly creating a process, analyze markets by having the economic data, the market data, then being able to go within that market, have all the listings, automatically calculate cash flow by just leveraging web scraping, which we could get into, and then finding my top 5 deals and going to my agent, hey, these are the top 5 that I want to look at. Let's go quickly, which matters a lot now in real estate. Back in 2019, you can kind of get away with being a little bit slow. But now, like, speed is everything. The deals can go away pretty quickly. So having some sort of automated process to help you can really make or break getting a deal.
You mentioned, Ariel, that you are taking almost like a commercial real estate approach to residential real estate. There's big organizations like John Burns Consultancy that the big guys will go out and they have 60 data analysts, and that's all that they do all day long, right? And the big builders, big national home builders will go to those guys and say, okay, we're thinking about building a multifamily or 400 single family homes over here. Give us the full picture. You are bringing almost that commercial approach to the local residential real estate investor and the mom and pop. That's fairly unique. Right. You also mentioned Zillow, Redfin, and all of the data that they present. But over the years, people would send me deals on Zillow and say, hey, David, I saw that this house here has a discount of $30,000. And do you think it's a good deal? I'm like, I don't have a clue if it's a good deal. It could be discounted by 95%. I still don't know if it's a good deal or not. It could be no house there. It could be vacant. It could be it could be condemned. It could be anything. So a lot of our listeners are going to be out of state investors. They live in high cost markets like New York, California, Boston, those kind of places. And so a lot of these people, they're just simply not going to get cash flow in their market. And so they're going to gravitate towards cash flow markets. And it's my experience that a lot of these people will also go to where they can find kind of the right team and the right infrastructure. And, so they're not going to necessarily use all of this analytics to help them find a property. They're going to find the team first and then find whatever the team is selling, then they're going to buy that product from them. Your approach is very, very different, which I really, really like. So your approach is identify, and it's amazing when I was listening to you, because it happened to me in my life. And this is an aha moment, if you're listening to this, is the moment you realize that there's a huge market, the whole of the United States, or there's a whole of a state. But then once you start chunking it down, once you start filtering, you filter stuff down. And in my market, I filtered it down to like 3 neighborhoods, just like you did, right? I don't want this. I don't want older homes. I don't want newer homes. I don't want flood zone. I don't want this. I want them to look like this. I want them to be on this road or this access. Once you do that, you're actually just looking at 1 or 2 or 3 neighborhoods. And then once you learn those 2 or 3 neighborhoods, then there's another layer of data, Ariel, that you need. Okay, so we have our neighborhoods, we have them identified, and I'm assuming back in the day you were in South Amboy and you were buying on a regular mortgage, so you were going out to the MLS. Once your decision was made, you were going out to the MLS to buy pretty much a turnkey property. I don't think that first deal you were buying a tear down or a wreck or something that needed $200,000 worth of renovation. Would that be fair?
Yes, that's fair.
So you went to the MLS to buy it. So you use the data to help identify the property. We're going to get back to underwriting in a moment, because identifying the property is one part, underwriting the property is the next part. But then there's an area of real estate I want to talk to you about right now, which is once you identify a neighborhood, like 2 or 3 neighborhoods, then there is things like there's public record data. So you've got the MLS, you can buy. You're not getting a deal on the MLS these days. I think we all kind of agree. You can buy a house, but can you get a good deal? You can buy a house from a wholesaler. That wholesaler is probably using somebody like you, right? And I'll bet you do work with wholesalers, and that you provide wholesalers with the following data. So it is my experience, and this is where one of the big challenges for us that we brought to you initially was the data. The distress where you're going to find an actual deal is in a death or a probate, or in a lis pendens where somebody's going to go into foreclosure, or somebody's had a foreclosure judgment against them, or somebody has just had an eviction, or somebody has had a divorce. So, these Ds, if you will, death, divorce, they tend to create motivated sellers. And motivated sellers are the people that we're going to get a deal from, because they need a solution to their problem, and we can come in and provide that solution. But the difficulty is us connecting with them, because it's all public record information, and public records are messy, and they are difficult, and they're clunky to deal with. Tell me, have you managed to figure out that, getting into the public records, extracting that information and making that useful? Because I think that is for a lot of wholesalers, flippers, and people looking to get a deal in real estate, that's literally the Aladdin's cave of data. Have you managed to look into that yet, or what's your thoughts on that?
Yeah, I love that you mentioned that. When it comes to those different aspects, like you said, public record, also going to obituary websites to find these individuals who are motivated and have a higher likelihood of selling their property and at a discount. So traditionally, what most people would do, say if you're looking at, we'll say behind on your taxes, you would go to your county website. So for mine, it would be Hillsborough County in Florida. I would go and I would see what properties are behind on taxes. Now, this can update on a daily basis, and it could be pretty slow to have to go through, but it's the same steps every time. You sign in, You click a couple buttons, you then copy the address, and you probably paste it somewhere in a spreadsheet to analyze later.
Yep.
So when you have these repeatable processes, this is where you can use automation to help you. And when I started the process of looking into off market in, say, 2020, the primary resource that I was using was web scraping. So web scraping is just a way of being able to copy information from the internet on a repeated basis, but instead of doing it manually, you train either a bot or you create the code yourself. So now what a lot of people do is they have these bots where, because of AI, it's super easy. There's no coding involved. All you have to do is go to, say, Browse AI, for example, or Octoparse, and you spend 10 minutes going through what manual steps you would go through, highlight which exact parts of the information. So maybe the owner name, owner last name, property address, how long, maybe if it has the date that they purchased it, put all of that into a spreadsheet. So now it knows that's the data, the website you want to go to, the data you want to collect, and you could set this bot to just go off every single day and go get the data. So you're the first one to grab this information. Now, a lot of people may be thinking, oh, but can't you use sites like PropStream, Property Radar, et cetera, to be able to pull this data as well? You can. However, you have to remember that these companies, their main focus is being able to get data nationwide, so the breadth of data. It doesn't mean that they have as much attention to how often the data is being refreshed.
Yeah.
So what I have found was that although they provide an amazing service of allowing you to contact everyone in the US, if the data is, say, 4 weeks behind from when it hit the county record, you're now number 20 of like mailers that went to the person's address.
You're eons behind for sure. And I think what you're saying, Ariel, is like, because I literally, I think that it's, for me as a wholesaler, I came from a wholesaler background. I came from a sales background where all I wanted to do was close deals, right? I wanted to talk to people, I wanted to figure out their problem, and I wanted to be able to help them with a solution. Sometimes I had to help with a solution in buying a property. Sometimes I could help them list it. Sometimes I could just send them a painter, right? And then they could list it on the MLS themselves. But the nails on the chalkboard is everything you just described, right? Go in, log in, click a few buttons, and then repeat that. That to me makes me want to go jump out this window right now. And I know that that's a similar feeling to a lot of people that are, kind of like a high D, let's go, go, go. I don't want to figure out all those little nuances of how to do A, B, and C. Just give me Miss Sally Seller's name and number, and I'm going to call her, and I'm going to figure out if I can provide her a solution so that we can buy the house, we can renovate it, we can sell it, or we can wholesale it, right? When you've kind of brought this kind of technology to the market, what type of feedback have you gotten? Because it's like anything, it's like as you're building a business, right? You're going to come out, you got to come out with something. You got to start flying the plane, right? But then you're going to notice that, that the seats are a little bit off, or maybe the door is ajar and you need to adjust it. So what type of feedback have you seen from like the typical clientele, whether that's real estate investors or maybe realtors or maybe someone that you may not have thought of? What type of feedback have you seen from it? And what type of kind of pivots have you had to make along the way?
Love that question. Yeah, it's all about involvement and the feedback that you receive. So practically most things that I've built, maybe 80% is all user feedback driven versus like my own ideas. So first it was, how do I just get these listings on a regular basis? Solution, use web scraping or use some sort of bot. Then it became, how do I do this repeatedly? So like I said, you can set them to an automation, which is great. Now, the evolution came when it was, how do I automatically put this into my CRM? Because I don't want to have to manage different spreadsheets and such. So then I started to look into how to use Podio, go high level. I don't really find enjoyment in just connecting different applications, to be honest. I like actually working with data. So I pivoted to like kind of point people towards my resources that they like, that's their specialty. And then the next follow-up question is, okay, so now I have that property, it's in my CRM, but I want to be informed when I go talk to the seller. I want to know what their property is worth, what it can maybe rent for. How do I automatically stream that information? So that's where came my next level of being able to automatically add Zillow estimate, Redfin estimate, realtor estimate. So you're not going to all these websites individually or hiring a VA to do so, and then automatically pulling rents from Rentometer from Rentcast, and then having an estimate right away. So boom, you're talking to the seller, you're informed, you have that data, and you could just go right into a conversation.
Deep level underwriting was my next question. Okay. Yeah, so I'm glad that you've pipped me to the post right there. Getting the data, getting it into a CRM, and then underwriting it effectively. That's always been, it's a skill. I think the ability to have your underwriting in the same format over and over and over again, it when you're using things like Rentometer and you're using things like Zillow or Redfin's estimates, these are pointers, right? These are, Realist have a really great, they call AVM, which is the average value for that property in that neighborhood, and it gives you a breadth. It could be like $280,000 to 340. 340 being the beautifully renovated, 280 being there's a tree in the roof, and so when you move the data and you bring it to underwriting, all you can do at that point is pretty big picture, 64,000 feet high underwriting. You can't do that like the really nitty gritty underwriter. But when you pick up the phone, and I'm delighted you say that, when you pick up the phone, you need to have something, right? So I found in my experience what they bought the house for, when they bought the house, right? That's important. Do they have a mortgage on the house now? What would their estimated equity be right now if I pick up the phone? Is there any public records regarding permits? Is there a new roof? Is there a new AC? Is there, because that will let you know that they're spending money on the home, right? Is there any Google image that's like, when's the last Google Street View image that was taken of this property? So you can see, oh, there's trees, all over the place, or it's actually beautifully maintained if you have that very latest image. So in addition to having the rent and having the quote unquote ARV, there's a lot of other data that you can put in there that's very unique to that property. And I think nothing more so than, okay, here's somebody that has gone through an eviction or a divorce or a death or this. They bought the house in 1985, and they bought it for $300,000, and it's now worth $7 million. I'm just being facetious here. Let's make another number. They bought it for $120,000. It's now worth $450. They had a mortgage at the time, but they've no mortgage now. So when you pick up the phone at that point in time and you go to make your offer, because there's about 5 different offers you can make. You could say, well, if they have a lot of equity, say, well, would you do an owner carryback? Would you do owner finance? Or if they have a 3% mortgage that they got, let's say, 5 years ago, but they don't have all that much equity, they have a little bit of equity for sure, say, listen, I'll give you your equity if you could give me your mortgage. So do a sub-2 deal. So I find that the real nitty gritty of the conversation you're going to have with that seller is the next layer of data. And I know you've been asked for that. So when it comes to underwriting, in addition to, because we can get the Zillow's estimate and you can get the Rentometer, but there's this other, again, Aladdin's cave of color, if you will. How have you tackled that? Because I know you've been asked those questions.
Sure. So what I've been doing is using other APIs, so other services that have gone out and collected this information. A little bit of a background is that the United States has about 3,000 counties, and each of those counties are different in how they collect their data, how they share their data.
Yeah.
So those like web scraping tidbits that I shared previously, that's good if you have a focus of maybe like 1 to 5 counties that you're going to be working with for the next 6 months, and that's it.
Agreed.
But when it comes to looking more widespread, it's useful to look at these companies that's their whole job. They are basically have a team of engineers that are streaming how to get the data from each of these counties. Yes, it may be outdated at times, but it's usually by like 1 week to 4 weeks, just depends on the area. But when it comes to things like the owner, how much do they owe on the property? Is there a recent death? Things like that. Usually they're like pretty good with. So What I've used in the past is real estate API as well as batch data to be able to get this information automatically. So how does this work? So you have your CRM, you have those bits of information, like you said, like AVM and rent. But when you're collecting that property owner information, motivation levels, their financials of how much they owe in the property, this is where you ping the API, which you could send in just an address. So the full address, street, city, state, and zip code, and it will return all that information.
Wow.
That's
And then
amazing.
you could easily streamline it where you give some rules, even without code, just give some rules if in your CRM and say, from that mortgage little section, pull out the field of estimated equity, pull out estimated mortgage, pull out how many liens, and put it into these columns for my CRM. And now you have this workflow that every time a new property comes in, it's hitting that API, it's bringing in that data.
Ariel, I need to jump in. What you've just described there for the listener, there's two things I want the listener to take away. Number one, unless you're Blackstone or American Homes for Rent, you do not need national data other than identifying initially a market. Okay. And we're big proponents on this podcast of creating the emphasis about going deep rather than going wide. And so you've just said it. When it comes to data, going deep is you're going to get better data. You're going to get more nuanced data because you're getting the same data every day. And if you're looking in 5 neighborhoods and you get the same data for those 5 neighborhoods, and then you're getting way more colorful data because you're getting the data that really makes a difference when you pick up the phone and talk to the human who actually knows the data that you're looking, that you want to have an intelligent conversation with that seller, right? So identify your market, get pretty local on that. And then what you've just described is layering in things like equity, mortgages, mortgage dates, any distress level, scoring those distress levels. What you have just described is an absolute superpower in this business. And I mentioned there were 3 stools to real estate. You've just knocked it out of the ballpark on the first stool, is take data, because that data puts you on the phone with the person who's going to actually sell you a home, and everything is downstream from there. Ariel, you run a number of different channels and communities, and I'd like to take a couple of minutes to talk about these because there's no doubt in my mind that what you are providing is one of the most important services in all of real estate. There's people who go off to boot camps there's certainly a lot of YouTubers and podcasters out there like, well, I'll show you how to do your first deal. I'll show you this, I'll show you that. And I've done 1 or 2 of them over the years, just to really see what they're all about. And they're bloody nonsense, a lot of them, and they add no value, right? But what you are adding is true, meaty, actionable data and actionable value. And so you have a suite of different products, from your podcast to the YouTube to your coding class to your coffee closers. I'd like you to walk through the connective tissue between your various products and platforms so that the listener here can start to engage with Ariel Herrera. They can just, watch your videos, but then how do they really extract the value that you can add, and then they can apply it to their market? So can you walk us through the funnel, if you will, of Ariel Herrera?
Sure. So it starts off with the YouTube channel. The intent with the YouTube channel was to provide all these hacky ways of how I was analyzing deals with data as well as markets with data. This is where I created some courses for others to be able to do the same. But as technology continued to evolve, especially with ChatGPT coming out, the questions that I would get weren't as much, how do I do this? It was, how do I have this done for me already? And I recognized that the main pain point folks had was that, like you said, I think Clark earlier, people want to get back time with their family and their friends, right? So if they can have a software streamline a lot of this, it really helps. So this is where we created coffee closers, which is a software that takes you from finding the best city, neighborhood, and ultimately the best property within a given area. And we do that by leveraging multiple data sources. So say 123 Main Street, we're not just pulling that from one source, we're pulling it from 5 different sources. Then we're seeing which data is the most accurate and then analyzing what are the best exit strategies, so which would be the best for you. From there, we notice that although this is like a self-service, like a Zillow, but if it was made for investors, there are still those investors that want to understand can I actually make the best use of this product and how can I use it for creative strategies. Like you said, there's barely any deals in the MLS that work today with interest rates. So looking alternatively at creative strategies, medium-term rentals, other exit or hold strategies is really important. So that's why we developed the Creative Closers community, which is where we have weekly group coaching. We also have office hours. So this is where we dive really deep into how do you actually analyze a deal? How do you create a plan for yourself based on what you're looking to accomplish in the next 10 years? How do you assess a market in the right way? So it's basically like a guide, I guess a quick cheat sheet. If you don't want to, spend hours watching YouTube videos or taking a course, it's kind of a cheat sheet to have a mentor by your side and helping you along the way. So that's pretty much the process that we've worked on over the last year and a half. And as of March, the big pushes that we had was the strategy. So being able to quickly see for a deal, will this work long term? Will it work fix and flip? Will it work for house hack immediately? And then the second piece is neighborhood grade map. Too often, I see that to get really good data, you have to have the access to a subscription of $10,000 or more for these commercial type of softwares. So we basically have streamlined being able to analyze neighborhoods, so little pockets of areas, by leveraging some free data, but also by looking at historically what's sold and currently what's selling to let you know, is an area today an A neighborhood, B, C, or D, which could work for any strategy, but is really important so that you make sure your investment is in the right location.
It's like falling down on me with just obviousness is you as you're talking, I'm sitting here and I finished reading Who Not How by Dan Sullivan probably 6 months ago, right? And David said, the seminar, how do I flip my first house, or how do I find my first rental, right? How do I find my first rental? How do I find the property? How do I, pick out the right kitchen countertop? And the interesting thing, and it's becoming evidently clear, and especially as I become my journey of real estate, evolving through it, is being able to, you are offering something that is building a business. Me going out and learning how to flip a house is me going out and trying to find another job. I mean, it's that simple, right? It's all dependent on me. It's all dependent on me waking up and busting through doors every morning. And as I've gotten more experience and I've made a lot of mistakes along the way, it's less about how do I find the next deal and how do I find something that builds a business that has the foundation that will go out and essentially find the deal for me, right? And this is literally who, not how. This is like, who is going to build my company so that I can sit above it and not inside of it, just digging ditches every day. And, we all want our time, right? We want financial freedom, but we want freedom of our time, right? Financial freedom leads to me being able to do as I please, say no to the things I don't want to do. And I will tell you that this 45 minutes or an hour this may be the most important podcast that we've done to date. And we've done 30, 40 episodes now because of the fact that it is something that is helping. It is a tool to build a business. Okay. And if you're not building a business, you're just creating a job for yourself. It may be a high wage job. You may get paid very well. You may drive a really nice car, but the minute that you stop that car, your business stops with it. So I'm interested. Have you heard that before? Is that kind of where you're trying to kind of point the fire hose with this business?
Yeah, I've actually heard that before. And thank you so much for detailing that and mentioning it. That's exactly where we're trying to go. I feel like investors have been led astray over the last decade where you have to be like this super manual in the weeds type of person to be able to succeed. But similar to what David had said too, like having that team around you is so important. And then also having the right tools is really important as well. So when you marry those two together, you're no longer burdened with all these extra tasks and you can move a lot more quickly to grow your business.
Ariel, you have used these tools and you personally have evolved. Okay, since I met you first, you obviously personally moved from New York to Tampa, and I might mention that we do not know you. We obviously live in the Tampa Bay area as well. That's just by happenstance. We have not met personally, so we haven't met in some kind of RIA meeting or anything like that. We actually found each other online. But to what degree have you personally, because you're dealing with investors, so you're building this business, and real estate investing for me breaks down into two things. Real estate investing is an awesome place to park the money that you make today into an asset that will liberate you completely in the future, or you can quickly churn real estate today and let that be your business. You should be doing both. So let's take real estate flipping for an example, or a W-2 income. You go to work every day, you make money, you get that money, you invest it in real estate, you park it over there, you forget it for 20 years, okay? Until your real estate is all built out. Now, you are building this business, and this business is going to be worth a lot of money in a number of years because you're building the business right. You're building it as an automated business. You're building tools, and it's not centered all around you. At a certain point, you're going to have a suite of tools, and those tools are going to be able to be used. Let's say we talked about the color of, I think, and I do think that that's where it will end up, is providing more nuanced local analysis for people rather than, there is this national need for, if you're sitting in California, like, oh, I want to invest overseas, or excuse me, out of state. Where will I go? Okay, so you need to narrow that down, and your tools will help you. But my question is that you have been building these tools for other people, and you're getting this user feedback, and by extension, you're seeing their business model, right? So you would have seen a lot of people come to you. Some are organized, some are not organized, some are small, some are mom and pop, some are big. What have you used your tools yourself to grow your own real estate? Are you focusing largely on growing the business with the tools? And so there's two questions. How have you used these tools yourself to grow your own real estate portfolio, if you will, or your own real estate business? And what have you taken from your clients' business models over the years, and where do you think right now the puck is going in terms of business models and what's working right now out in the marketplace, considering there's some negativity out there?
Great question. Yes, I've used my tools for myself, especially discovering, well, I'm not sure if the right word is discovering, but deciding going from New Jersey, South Amboy, like looking at the rest of the United States, where was I going to go that could be great for myself, but also for my investment purposes. By leveraging my own tools, that's how I pinpointed Tampa and specific neighborhoods within Tampa. Aside from that, I have been able to acquire several properties. I want to scale more, but I have been focusing primarily on the software aspect. So helping individuals by listening to their feedback, coaching them, and then being able to further improve the product. The number one thing I see that's going to be a trend is walkability. People don't want to live in the middle of nowhere, have to drive very far. That's going to continue of having walkable communities.
Some of our competitors are out there, and they're all very suburban or even rural. And, they're, in my view, they're firing first and aiming later, right? In that, oh, there's a cash flow deal, there's this deal. But then they come and they realize that there's every national home builder in the United States is building new homes around them, so you don't have an exit strategy. Or there's a lot of new inventory coming on stream in that marketplace. Nothing wrong with that. But we have, on a very personal basis, been heavily emphasized on inner core, walkability, downtown. And right now, you've got the blood on the streets YouTubers out there telling you that the world is falling apart, the sky is coming down in Florida, and then yet you go downtown Tampa, downtown St. Pete, you go into the walkable neighborhoods in there, and they are going gangbusters right now. So please continue on with that thought that you were like that this data is bringing you to what conclusions?
Sure. And also taking one pause there, I absolutely love when I see news articles say run away from Florida
Yeah.
because one, get to keep it a little bit more Florida, and second, you're missing out on one of the best opportunities before like California became California,
I agree.
in terms of rising income, of appreciation. I mean, the state's not going anywhere. So with the data itself, I have been able to increase my own investments, help others. I do see with the NAR settlements that it's waking up a lot of people psychologically, like, oh, wow, I didn't realize that going through an agent really takes so much of my life savings and life earnings and life asset, like
Yeah.
out from under me. So yes, will agents be still a heavy part of the real estate industry? Of course, and they're needed in a lot of different aspects. But I do see with that settlement, along with what's happening in AI, there's going to be a lot more people willing to do for sale by owner. And that's a hot opportunity to do seller finance deals with those individuals, have terms on your own conditions, and be able to scale even faster. So that's something I'm looking forward to, not only helping our clients with, but to be able to grow my portfolio in that sense as well.
That's really super insightful. Where I'm from, Ariel, I'm Irish, and I have been working in the international real estate world for a very long time. And your typical commission when you sell your home in Ireland or England is like 0.75%, less than 1%.
Wow.
And that's a norm, right? That's a norm. And the methodology there is that you go and you list your property with, let's say, a listing agent. And then all of that listing agent will market the property, but there's no buyer's agent. So you just go to that listing. If you like that house, you go to that listing agent. If the buyer sees a different house that they like the look of, they go to that listing agent. So they've completely and utterly eradicated the buyer's agent. It doesn't exist. The buyer's agent doesn't, it's not, there's no buyer's agent, And yeah, so that's super insightful that there's literally tens of millions of dollars on the table right now and in helping homeowners themselves sell their own property without having to pay this enormous 6%. 6% is if you've got 30% equity and 10% of that is going to get taken away of the actual equity in capital gains tax, and then 6% is gone in real estate fees and another 2 or 3% on closing costs. You're just after, you might have 30% equity in your house, but half of that is going to go on junk fees and taxes. So that's a superpower. That's really, really interesting. Ariel, we're getting a little bit closer towards the end of this interrogation, but I want to know a question that we talk about a lot. There's 3 stages of real estate life that we talk about. There's like, if you're 20 to 35, that's when you're out of college, you want to get into real estate and you need to make money, right? And then you got, 35 to 50. That's when you're going to solidify your wealth and use whatever money you've made and invest for the long term. And then, 50 onwards, people tend to just want residual income. Okay. So if you were a 20-year-old, how would you use this data right now? And if you were a 35-year-old, how would you use the data? And if you're a 55-year-old, how would you use the data? And I'm assuming you've understood that I'm asking 3 different questions.
Of course. So at your earlier stage, if you're between 20, 35, looking for a particular market, I would say use the data to find up and coming areas. These are areas that you may walk down the street and there's a lot of culture, but maybe it's not particularly gentrified or at its highest use yet. And a lot of investors will kind of back away from that. But one of my favorite examples is like Hoboken, New Jersey, and Jersey City, New Jersey. These are cities right outside Manhattan. And a lot of people in the 90s and maybe early 2000s were like, whoa, like not touching that still, not a great area. But
Yeah.
you look and you get into New York in 15 minutes. Of course, as population starts to expand, people need to be able to go to neighboring areas. So if you use US Census data to look at population trends, look at median household income, education, especially education, you could see these little pockets of areas that start to have higher education. And what that usually means is that young people who come out of college with good paying jobs but can't afford to live, say, in Manhattan, where are they going? Are they going to deep areas in Brooklyn that people previously weren't, looking at?
Yeah.
So this is how you can kind of get ahead, tap into a market that could give you cash flow in the near term, but also really appreciation 10 years out. So now shifting over to 35 to 50, now you want more of a balance. So instead of taking that risk of maybe a C area, I would say try to stick within the B zone. B zone areas that are still like walkability, maybe more people are starting to come in, maybe the population increase isn't as like drastic as say those other areas, but it has like stable cash flow. So I think stability there is key. Then the latter phase, you really want high cash flow over appreciation. So I think at that stage, looking at different strategies, exit strategies is more important, not just location. So right now, a lot of long-term rentals may not work in certain areas, but when you look at other strategies of short-term rentals, medium-term rentals, or adding value, like doing more fix and flipping, adding a bedroom, these types of ways to increase income on the property could be really useful to quickly generate cash flow and maybe be able to retire earlier with just a few properties.
It's funny you said that because we've almost created a company around the 50 plus crowd that wants the cash flow, but they don't want the toilets and the tenants and the taxes. And so that's why we said, hey, we're going to create a lending company where you can just invest with us and it's the most passive money you can get. So it's like in the first few stages, you're buying the C-class stuff that's going to cash flow better. You're willing to put up with some time. And then you get into the 35 to 50 and you're really kind of pouring gasoline on that investment fire. And then the 50 plus crowd, it's like, no, I don't want to do any of that stuff. I don't want to have to deal with property managers and tenants and all those kind of things. And that's kind of what we saw that coming, especially with the lack of cash flow. I think it's interesting is that you type in, you go to Apple Podcasts and you're like, all right, I need to buy something that cash flows, right? And you're going to get all these places that say, Bigger Pockets will say top 5 markets that cash flow, right? With no kind of thought process about like, all they're looking at is that I can buy an $80,000 property that'll rent for $1,000 a month, right? That quote unquote cash flows until you have to replace the roof, until you have 3 turnover, vacancies within a year. And that's kind of it, right? So I think it's so important for someone that's like, especially getting started, to be able to utilize this software because it's like a cheat code, Ariel. Is like, if I started buying rental properties and I just said, okay, I'm going to go out and find something that I think I can afford and it's in my backyard, and it's not, and you're in Detroit, right? Or you're in these areas that there's going to be such a low appreciation. There's not new businesses coming in. There's not new revitalization. You may end up having to do what David talks about all the time, which is like you buy your first 5 or 10, and then you're so burnt out by tenant turnovers and replacing things on old properties and no appreciation. You have to trade out of all 10 of those properties and you're putting into something else. And when you're putting it into something else, right, you're resetting the taxes. Okay. So that's something that people don't talk about a lot, is like, if I buy something in 2012, well, my taxes are 50% of if I had to rebuy that house today, right? So if you can save someone listening to this by not having to restart in 10 years to start a new portfolio somewhere else because they bought in this rural area of Alabama and they own 6 or 8 properties, that alone right there is a cheat code that I feel like you could just stop right here and play minute, 56 to 58. And just being able to save that and keep the momentum going to be able to continue to buy in the right areas is such a big deal, as opposed to, hey, I see that Memphis, Tennessee, I can cash flow on paper $300 a month until I can't, right? So, that to me is just struck home.
Love that.
Ariel, quite frankly, I want to summarize what I've taken away from this, and I hope that the listener does as well. I want to use an analogy. Getting into real estate and trying to profit in real estate without using the tools that Ariel provides is like going out into your garden shed and taking your bike out and taking the wheels off and seeing how far you're going to go for a bike ride. You are the wheels on the bike. The bike doesn't work without your products. And I want you to really, really, really pat yourself on the back, because these are generally the barrier to entry, the moat around real estate, certainly from my perspective over the years, is data. Is how do I get it? How do I underwrite it? How do I analyze it? And then how do I pick up the phone and make up that call? And that's been the moat. It's not a very deep moat, but it's a work moat. It's time consuming. It's clunky. Real estate, buying and selling of real estate is tremendously inefficient. I can go on a stock market right now and I know the exact price of Apple shares this second. I can trade it in a nanosecond. I can buy it, I can sell it. It's ultimately massively efficient. The market has no inefficiency in it. Real estate is the most inefficient market that I know of. And yet, and that inefficiency is where I have made my money over my career. And I think what you provide is this level of efficiency in getting the data, analyzing the data, and putting you on the bike, putting the wheels on the bike so you can go for a bike ride, so you can get moving forward. And I think I'd really like to present at this point in time the various ways that people can connect with you and the funnel. If you don't mind, I just gonna run through a few of these. So if you're getting started and you want to know more about Ariel, this resource, her YouTube channel, just go and nerd out on Ariel's YouTube channel. It's techinrealestate.com is her website. But her YouTube channel is just Tech in Real Estate. Okay. And from there, you can connect also with Ariel on her Facebook group. And there's a beautiful group in there, people talking, chatting, giving advice to each other. She's got her LinkedIn, Ariel Herrera at LinkedIn. But more importantly, I want to talk about your Coffee Clozers product. Ariel, your Coffee Clozers, to me, is an absolute essential gathering place. It's a support group. It is a tech. It's the way to connect with you and personalize tech questions that people have. And I think if anybody out there who is serious about growing a real estate company, a real estate flipping company, a real estate wholesaling company, or just building out a real estate portfolio, go to www.coffeeclozers. That's CLOZERS or ZERS.com. That's coffeeclozers with a Z.com. Ariel, can you just, as we go out the door here, can you just quickly talk about what people can expect when they join Coffee Clozers?
Yes. So we're a community that's here to support you, not just in research, but to the end of being able to actually make an offer on a deal. It's myself and 2 or 3 other co-founders at this stage. We're all technical, means a data scientist, 2 full stack developers, and a UX designer. Where our specialty is that instead of other products that you see out there that are kind of created by someone who's more sales and they're kind of verbalizing to people overseas how to make the product work, that's very slow. And that's not what you need. You need someone who is actually deep understanding of the domain, so understanding real estate and building the product for you. So when you come onto our platform, we not only help coach you to get through those deals, but we take your feedback in, and sometimes within 30 minutes, if you want to see a new tag, a new feature, or something on the product, we can do it for you. So with that, super excited to see who will become the next Coffee Closer.
Oh, it's amazing. And Ariel, I want to tell you something that I took away when we reached out to you about a month and a half ago to jump on a podcast today. You said, yeah. I can meet you on the 14th of August. And I smiled and I understood it as well, is that you have another superpower, a personal one that I admire and I'm trying to get better at it myself, which is focus. And putting yourself into focused, deep thought for a period of time so that you come out with the product that you want to build. So when you look at these problems initially, you can't do this in an hour. Or you can't do, oh, I'll keep on doing this, that, or the other. Your ability to block out the world and go into deep thought, I think that is something that is so rare in today's your phone binging, bonging, emails, and everything else. How do you quiet your mind and work on these deep problems, considering you're also running a business? It's okay if somebody else is paying you. I understand if you're in, you're a software engineer and you work in a software engineering environment, and that's what you're being paid to do, to just work in these quiet problems. But you're not. You're also running a business. You're running a mastermind group. You're running a Facebook group. You're running a YouTube channel. You're running coffee closers. How do you get the time to block everything out and focus on these deep thought tools that you're building?
Yeah, well, I would say the main thing is having a separation between work as well as just free time is really important for me. So, for example, Monday through Thursday, it's starting work 8 a.m. to 11 p.m. It's full days. But then the weekends, I try to get as much time as possible with family, with friends, the people that ground me. And that is what helps me to kind of set myself back for a moment of all these problems I'm knee deep in and think of them in like a further perspective. And usually when I work out is when I actually realize, oh, that problem that I was trying to solve, like
Yeah.
this is the best checklist that I can provide our group. This is the line to the code that I need to solve for. And the reason actually I now think this way is that I worked with this individual named Rob, awesome guy, and he would run 5 miles a day. And he would say, "Oh yeah, I just solved math problems along the way." He was used to be a professor in math. I'm like, "That's crazy." I
Yeah,
could just
yeah.
trying to breathe when I'm working out. But yeah, having that ability to kind of block your mind out, separate yourself from work, family, and friends, but also have some sort of activity that calms you down, whether it's working out, it's meditation, whichever, really helps to click everything into place that you're trying to solve.
Doc, I think you can concur.
Yeah, can we do like a 5 hour session just on that, like a one-on-one session? I'll get to your product, but I probably need that more. Yeah, it's been great. I think that we'll probably take it out on that, Ariel. At this point, I think that the listeners have gotten a lot to take away from. This has been really, really enlightening for me personally, just kind of listening, and I've actually taken some notes as we've gone through this, some actionable steps. So I'll let you, if you want, just give our listeners where they can get in touch with you if they would like to, and take us out. And we really appreciate it, Ariel. So how can our listeners get in touch with you?
You can reach out to me via email, Ariel Herrera, analyticsariel.com, or on LinkedIn, Ariel Herrera. I love being able to answer any questions. You could be at beginner stage, intermediate, or even expert. This is the reason why I love doing this, being able to talk to others, help them in their journey. So I'm looking forward to hearing from you.
I love it.
Thank you, everybody.
Yep. All right. Well, we'll see you next time, everyone. If you liked what you heard, if you subscribe to the podcast, we love reviews. And with that, Ariel, we appreciate it. We've enjoyed it. And we'll see you next time. Thank you, everyone.
Thanks.
All right, Clark. So there you
Cool.
have it. There's Ariel. Like what, that took an hour and 7 minutes. But that was absolutely worth every minute of it. Clark, as I said at the start of this, there are three legs on the stool of real estate. There's the data, there's the field, and there's a contracts management. And most people don't have all of those three skills.
Right.
If you can't scale if you're doing all of the data, all of the research, all of the crunching, the going out there, gathering the data and doing all of the underwriting and making all of the offers, and then going out in the field and then fixing floors, doors, and baseboards, and then doing contracts, and then doing financing, and then doing asset management, and then doing your taxes. There's very few people who can do all of those things that I've just listed out. But it's amazing how many people at the beginning of their real estate journey try and be all of those things. And Superman. I implore you, if you are doing all of those jobs, do yourself a favor. Identify which of those three roles, the data, the analytics, the underwriting and the making offers, the field, getting stuff done, fixing, building and repairing, design, contractors. Maybe you're good out there, or maybe you're really just good at contracts management, taxes, payments, ongoing asset management, dealing with property managers and all of that kind of stuff, right? So I implore you, if you're doing all of those, if you're wearing all of those hats, you're probably not going to go very far very quickly. Clark, Ariel has given us a masterclass. Nothing happens if you don't have a deal. Nothing happens. And I think that is the first area that people fundamentally misunderstand. So Clark, what do you think Ariel provides in that interview and in the services and the community that she offers? What's your big takeaway from that interview right there?
It was great because it's a good reminder, right? And I want to quantify this for you. So, a lot of times when people get into business, right, they're like, okay, I've got a product. Like, how do I sell it, right? What do I do when the person asks me about this question about this type of product, right? And you're kind of starting at like step 4 or 5 in the process. And it's something like, if you're going to get into real estate and you want to be like a real estate investor, right? You're like, okay, how do I underwrite a house? How do I figure out how much renovations cost? How do I talk to sellers? What if a realtor asks me a question and that's all stuff that you need to know, obviously, but it's all extremely relevant. I don't care how good of a project manager you are. I don't care how good of a salesperson you are. If you're talking to the wrong people, right? And so, as you alluded to, is that the sales coming in the front door is the gasoline that you pour on the fire. And without that sales gasoline, you have nothing. Okay. So I want to give you an example and quantify this for everyone listening, is that when I first got started, David, I bought a franchise, right? And what they did essentially is they were lead gen. Okay. So they got the phone to ring. Okay. So I was able to ask those questions. What do I do once the phone rings? How do I talk to them? How do I provide value? Then once I get in our contract, how do I renovate the property? Right. But guess how much that cost? I started out spending $3,000 a month. It went to $5,000, $7,500, $10,000. And at the peak, I was spending $20,000 a month. Okay. So do the math, $20,000 a month. That's $250,000 a year. I'm going to repeat that, $250,000 a year just to get the phone to ring. They didn't close the deal for me. They didn't renovate the property for me. They didn't give me free loans. The only thing they did was get the phone to ring. If you can imagine me being able to cut out 90% of that budget by using something like Ariel's services to be able to find the right seller, right? One of my strengths is being able to talk to sellers and identify problems and show empathy and figure out a solution, right? But if I'm talking to someone that has a beautiful house and they don't need any repairs and they're not in a rush to sell, I don't care how good I am wasting their time, okay? And it's wasting my time. So that service that we just spent an hour talking about is the backbone of what you need to be able to build a proper company. And without that, you're standing on a house of cards. So it's something that reminded me, David, that I need to go back and really, really hone in on the data that we are getting, how it's consistently coming. I can't just get it once and then stop and be like, okay, I'm good. We have to be able to have a consistent system in place to keep funneling that data toward us. So I'm talking to the right people and I'm not just spinning my wheels. David, I'll leave it at that. It was it impacted me greatly. I think it might have been my favorite episode selfishly from what I took away from it. And I'm excited to go out and implement a lot of those strategies. And I hope you are listening to this to be able to take that, reach out to Ariel or someone like her. And, I highly recommend that. So David, what Did it make an impact on your life today? What did you see on your side?
I love what you've just said, Clark. The bottom line is there are millions of houses out there, and there are thousands of markets out there, and there are absolutely millions of sellers out there. And anybody out there looking to grow a personal real estate portfolio or grow a business in the real estate world needs data, right? Now, the power of that data is, as you alluded to, is when you pick up the phone. You need to know as much, if not, you need to be able to identify where are the points of distress in the market, or where are the best markets, where are the neighborhoods, where's the area that you want to invest in, what's for sale, and who in that neighborhood might want to sell, right? And then once you've identified the market, the neighborhood, the absolute location, then you need to start analyzing who in that neighborhood is likely to sell. To your point, somebody with a beautiful house that just put a new roof on and they're not distressed and they don't need to sell. You're wasting your time sending them any kind of mail or reaching out to them in any way, shape, or form. But somebody who is getting divorced, somebody who's had a death in the family, somebody who's just gone to jail, somebody who has a drug problem, somebody who is going through any point of distress, may want a solution at that point in time to their problem. And if you can use data in the neighborhood that you're interested in to identify those people, provide you with full underwriting on their home, and then you pick up the phone. So when you pick up the phone, you have as much information as they do. And in many cases, they're unaware of you are more empowered than your seller in many cases. And so when you pick up the phone and you have an informational edge, the conversation goes so differently than if you pick up the phone and you don't know anything. And the seller will start talking to you and barking down the line at you about, everything about the house. If you have the information, if you have the underwriting, you are 10x more empowered to build a robust, targeted portfolio and, quote unquote, get the deal. Everything flows from get the deal. And what Ariel is providing is a laser focus on that information. So that's my takeaway. You cannot grow, scale a proper real estate portfolio, in my opinion, without the use and services of people like Ariel.
You can't grow a business, a proper business. And I want to leave you 2 examples. I remember when I was a W-2 employee, I was in sales, right? And I had a portfolio of, let's say, 200 leads of people I talked to and they didn't buy from me yet, right? There's still, some of them are hot, some of them are medium, or some are cold, right? And when you have 200 people you need to follow up with, right? And I know every single salesperson listening to this can understand what I'm saying. It's overwhelming. You're like, oh, God, I got to call 10 of these 200. Let me just start with the most recent ones, right? This service, if I was able to go to that person with 200 leads and say, you need to call these 5, right? Lead number 1, lead number 12, lead number 67. Do you think that you would have a better chance of closing those 5 that are the most ready to buy at that time? That's what this service does. And I know that if I had that type of service when I had 200 leads to follow up on, but I only needed to call those first 5 that had the best chance of winning the deal, oh my God, it's like a no-brainer. Second example, how many investors do we talk to that have analysis paralysis? Well, I want to get a cap rate of this. Should I invest in Cleveland or Houston or Austin, Texas or Los Angeles? I don't know. And that engineer brain, right? People that are like very, very calculated and they want to make all the numbers work and everything. This helps to eliminate 90% of that so that you can laser focus on exactly that meets those metrics in the United States, right? It's a very unique service. It solves a lot of problems. Guys, go re-listen to this episode. If you're that engineer brain, if you're that salesperson, it's a no-brainer.
And listen, I just want to leave people with this. Whenever you say, is this a good time to buy real estate, or is that a bad time to buy real estate, that you're asking the wrong question, because that's never true and it's never false. It is always a great time to get a great deal, no matter what the market. If you are armed with the information and you're armed with the data, you can go out and construct and build a great deal for yourself in any market conditions. And more importantly, when there is less buyers in the market and there's a bit of nervousness in the market, oh my God, this is when the sheepdog is out there running into the sheep, right? That's the analogy I'm going to use. The sheep have been out there dominating the market for the last, 6-7 years, let's say. Well, now it's time for you to be the sheepdog, to run into the field, and you're the only one doing the buying. And get in there. Know that using services like Ariel's, it is always a great time to get a good deal. Even right now, it's probably the best time I've seen in my 7 or 8 years to get a good deal. So let's leave it right there, Clark. What an episode. I hope you've taken away the importance of data and data analysis, and we will see you in the next episode.
Let's do it. Thank you, everyone, for listening. We'll see you soon. See you next week. Well, that is a wrap for today, folks. We hope that this episode shed some light on the complexities of the real estate market and kind of really gave you some actionable insights. Because remember, you navigate the world of property investment, it requires more than just luck. You're going to need strategy, you're going to need knowledge, and of course, you're going to need a little dash of courage. And if you enjoyed today's episode, be sure to hit that subscribe button. Leave us a review on any of the podcast platforms that you listen to and YouTube as well. And don't forget to follow us on Instagram and Facebook at Burn Your Boats Wealth, and leave comments, talk to us about things that you want us to talk about or things you disagree with us on. We appreciate all that type of insight. Your support really fuels our fire to bring you even more valuable content. So we appreciate you. We appreciate the support, and we will see you next time.
You've been listening to the Burn Your Boats podcast with Clark Lunt and David Shaw. We would love to hear from you. Please reach out at burnyourboatswealth.com with comments, questions, and if you have a topic you would like Clark and David to discuss on an upcoming episode. We would very much appreciate it if you took the time to rate and review Burn Your Boats podcast on your favorite podcast listening app, and make sure to follow and share on social media. Content in Burn Your Boats podcast is for entertainment purposes only and is not legal or financial advice. Please review our legal disclaimer at burnyourboatswealth.com. Thank you for listening.